This turbine represents the compounding force generated when you reallocate housing expenses into a liquid portfolio. Renting provides a mathematical advantage only when those saved funds are diverted into an active investment strategy rather than spent. We are going to calculate the specific cost of homeownership in your area and build a system that automatically directs the difference into the stock market every 30 days. To start, identify your current monthly rent and have a calculator ready to process your local housing data. Completing this setup converts housing savings into a liquid, growing net worth that remains accessible as your life changes. Step 1 is determining the actual gap between your current lease and a prospective mortgage. Your monthly rent is the upper limit of your housing costs. If the heater fails or the roof leaks, the financial responsibility belongs to the landlord, not your savings account. Conversely, the principal and interest on a mortgage represent the floor of your monthly costs. This is the minimum you will pay before any other ownership expenses are added. As we look at this ledger, we must account for the phantom costs of owning: property taxes, homeowners insurance, and a 1% annual maintenance fund. Added to the mortgage column, the total cost of ownership rises significantly. These unrecoverable payments do not build equity. Subtract your rent from this total ownership cost to find your monthly investment target. This dollar amount represents rescued capital, money diverted from bank interest and maintenance and placed into your own accounts. Step 2 is housing that capital by opening a brokerage account with a firm such as Fidelity, Vanguard, or Schwab. Within the account settings, navigate to the bank information section to link your checking account. This allows for the seamless transfer of your monthly housing savings. This transition keeps your capital fluid. Unlike a down payment locked inside a home's physical structure, these funds remain accessible and instantly deployable. Step 3 is selecting a growth vehicle. Use the search function on your platform to find a standard S&P 500 index fund. Entering ticker symbols like VOO, FXAIX, or SPY allows you to allocate your capital to a fund that tracks the largest companies in the United States. Choosing an index fund provides a diversified stake in the 500 most profitable American corporations through a single transaction. This asset class has a history of compound growth and requires no physical maintenance, property taxes, or weekend labor. The final step is converting this process into a recurring automated system. Navigate to the Recurring Transfers and Investments tab in your brokerage menu. A common error occurs after the transfer is complete. The money arrives in the account but remains uninvested. Without a specific purchase order, funds sit in a sweep account, losing purchasing power to inflation. You must select the Auto Invest option to immediately move capital into the index fund. In the Setup menu, select your fund, input the dollar amount from Step 1, and set the frequency to monthly. This automation replicates the disciplined savings of a mortgage payment while directing the funds into a liquid asset with higher historical returns. Your strategic renter system is now operational, managing your housing savings in the background of your daily life. This strategy provides geographic mobility for career growth, eliminates unrecoverable ownership costs, and builds a compounding portfolio. The shattering of this chain illustrates the removal of a 30-year debt obligation. Net worth is calculated by liquid assets and the ability to pivot your capital when opportunities arise. Consistent contributions to this automated system build a portfolio that grows independently of where you choose to live. Keep the machine running and stay focused on the long-term data.